Hi there, very good afternoon. Welcome back to ET. Now you're watching Market Fatafat with me, Kanushka and Ankita Saxena. This is a show where we'll talk about all the top buzzers in trade today, which are buzzing either on the back of news flow or on the back of technicals. But before we get started, a quick look at how the markets are shaping up at this juncture. And it's a rather negative day coming in for the markets. We're trading close to the day's lowest point on the Nifty, down about 42 points, 25,898. In fact, we've given up the 25,900 level also. So yes, that's how the Nifty is looking. Sensex 2 is down about 130 points, 84,558. That's the level where Sensex is trading. Nifty Bank 2, rather flat, absolutely flat moves on Nifty Bank, doing better than at least Nifty and Sensex, just down about 10 points or so. In fact, it has managed to turn to green as far as Nifty Bank is concerned. Actually swinging between greens and reds. So yes, that's Nifty Bank for you. Absolutely flattish moves over there. 58,950. That's the level where Nifty Bank is at. If we talk about some of the top losers in trade today, which are contributing to the losses on the Nifty, it's the likes of Max Healthcare, Eternal, Apollo, SBI Life, Interglobe Aviation. All of these are some of the top Nifty losers is what we are seeing in trade today, witnessing selling pressure. However, some of the counters have managed to hold on to that shade of green. It includes Shriram Finance trading nearly more than 2% higher, Hindalco 2 trading about 2% higher, whereas Tata Steel, Axis Bank, Bajaj Auto, all of them are witnessing gains of more than 1%. It's actually the auto pack which is showing some strength today. Most of the auto counters are trading in the green with the sales data due later this week. So yes, that's what we are watching out for, Ankita. Looks like a decent day coming in for the market, but for now we are trading close to the day's lowest point.
Absolutely, a lot of volatility that we can see on the monthly Nifty FNO expiry that's today, and therefore we see that volatility coming in. But let me get on board Osho Krishan, who's the Chief Manager, Technical and Derivative Research, Angel One, who's now joining us on the technicals. Hi, good afternoon, Osho. Thank you so much for joining us today with all your stocks. Let's get going with all the stocks that are in focus today. First up, of course, the defense pack. The big news coming in on the defense pack. The DCA approval of 79,000 crores worth of approval that's coming in. So now the brokerages have come out with their notes. Antique has come out with a note where they say that the key beneficiaries of this deal are BEL, BDL, HAL, Mazgaon Docks and Zentech and Solar Industries. Goldman Sachs has also come out with a note, and they're saying that the focus area, the proposal address key white spaces such as ammunition and radar, electronics, and include new age equipment, and the cumulative acceptance of necessity in FY26 now stands at 3.3 trillion rupees. That's close to an all-time high of 3.8 trillion rupees in FY24. Now they believe that the steep trajectory of AONS since FY23 implies that the pace of the ordering is likely to accelerate, and they expect Solar Industries, Bharat Electronics, BEL and BDL to be the key beneficiaries, while the trickle-down benefits are likely to accrue for other companies like Data Patterns as well. Motilal Oswal is also maintaining a positive stance, and BHEL, the target price that they've set is 500 rupees. For HAL, they've set a target price of 5,800, and for BDL, they have set a target price of 2,000 rupees. On the back of that, Defense Pack is in focus, but Defense Pack is trading in the red right now. They had moved up yesterday on the back of this news flow, so now the bit of a profit booking that's coming in on all the defense names.
All right. So it looks like the market has already factored in that DAC approval that has come in for the defense space. So it looks like some profit booking happening over there. But moving on, hi Osho, good afternoon. Well, you've picked out BPCL for us. If we look at the past year's, that is 2025's chart pattern, has given a good return of about 25% or so. Do you expect this momentum to continue in 2026 as well?
Very good afternoon, Kanushka and Ankita. Firstly, thank you for having me at the show. Well, yes, no doubt BPCL, as you mentioned, in the last year, there has been a decent movement. This year also, the counter has seen a very strong resurgence from the lower zone. So it is now at a verge of giving a breakout. So the zone of nearly 380, 385 is a breakout level for BPCL. From here onwards, I'm expecting that in a very short-term point of view, 385 should be the target. But once it breaches the zone of 385, then from there onwards, 430 to 435 will be the next potential target that one can expect in this counter from medium-term perspective. So overall, the trend is positive, and one should stay focused on the buying trend for BPCL. 385 followed by 430 will be the targets that one can expect in the coming year.
All right, so 385 followed by 435. Those are the kind of targets that you should look at. But moving on, another stock in focus today is Lloyd's Engineering Works. Now this one because its board has approved the merger of Lloyd's Infra, Metal Fab and Techno Industries into one company, that is Lloyd's Engineering Works. Now this merger creates a fully integrated engineering platform combining design, manufacturing and EPC execution all under one entity. This combined company will have a strong order book of more than 6,100 crore rupees that enhances its ability to bid for large and multidisciplinary projects. And on a pro forma basis for the first half of FY26, this entity has reported a revenue of over 1,400 crores, EBITDA of more than 242 crores and PAT of 160 crore rupees. And this share swap merger is going to be effective April 1st, 2025 and will expand the equity base with the promoter group still holding about 21% post the merger. So yes, that's a merger development coming in with Lloyd's Engineering. However, the stock is not trading all that well right now. It has given up those morning gains that we saw. It saw a run up of about 2% or so, but now it's trading in the red, down about % in trade today.
All right, moving on then to the next counter that is in focus, and that is Titan. Now, a couple of brokerage notes that have come out on Titan. Nuvama has come out with a note. They're retaining a buy call, and they've unchanged their estimates. That stands at 4,672 rupees. They feel that the new store collection features LGDs versus Clarity and FG color set in typically 14,000 to 18,000 gold, and the 1,000 square feet store carries the new store, of course, carries an 850 inventory pieces with 90% priced under 1 lakh rupees. Now, the category ranges from 4,000 to 4 lakh rupees, and the median price is somewhere between 40,000 to 50,000, implying an overall inventory of 4 crore. Now, they specialize in gold jewelry featuring lab-grown diamonds as well. Now, the model differs from the trends prom, which focuses heavily on silver lab-grown diamond combinations. Now, the labor cost is likely to equate somewhere between 1,000 to 2,000 per gram. And the view, this is a positive step they feel, but have not incorporated the format in their financials as it is too early for a numerical assessment is what they feel. But Morgan Stanley has also come out and they're maintaining an overweight, and they have set the target price at 4,060 rupees per share. On the back of that, Titan is in focus since yesterday on the back of the launch of lab-grown diamond store.
Absolutely. So that's Titan for you. But moving on, Osho, you picked out Nykaa for us. It's trading, well, 1% higher, holding on to that shade of green despite the negative day of trend that we are seeing on, as far as trade is concerned. But if you look at the year's trend, it has already given a very good return of about 60% in 2025. Do you think there's more steam left for 2026?
Overall, the trend is very positive for Nykaa. If we will be looking on the weekly or monthly time frame chart, then it has been forming higher highs, higher lows kind of a pattern. And even the recent correction from the zone of nearly 275 towards 240 has been bought into at lower levels from the 100 exponential moving average. And currently, the counter have showcased a flat kind of a pattern on the daily time frame chart. So I'm expecting that from here onwards, there can be a decent pullback in this counter. The immediate target comes around the zone of 272, followed by 278 from a very short-term point of view. So one can look for buying opportunity in Nykaa. On the lower end, 255 will be the advisable stop loss for short-term traders.
All right, so that's about Nykaa. But moving on, another counter that is in focus today is Waaree Energies. Now this one, because the company has announced a key leadership transition. Whole-time director and CEO Amit Paitankar has resigned to pursue opportunities outside the organization, and he'll be relieved by May 15th, 2026 or earlier whenever it is possible. In fact, the board has approved an internal succession appointing Jignesh Rathore. Currently, he is the director of operations. He is the CEO designate now with immediate effect. He's a long-term Waaree executive with over 18 years of experience. He'll formally take charge as a CEO on May 16th, 2026. Now, remember, the company has planned that this transition ensures leadership continuity and operational stability as Waaree enters its next phase of growth. That's the word coming from the company, and hence the stock is in focus. However, not reacting all that positively, down more than 1% in trade right now.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we'll get you more buzzes on the other side. Stay tuned.
Hi there, welcome back to ET Now. You're watching Market Fatafat with me, Kanushka and Ankita Saxena. This is a show where we're talking about all the top buzzers in trade today. And time now to put the spotlight on Axis Bank, Osho, that's the one that you've picked out for us. Let's take a look at how the charts are showing. It's trading well above 1% in trade today, despite that negative trend in the overall market. In the past 6 months or so, it has given a return of just about 4% or so. But from here on, where do you see the stock headed?
See, overall, the counter is a heavyweight banking counter, so I'm expecting that from here onwards, the pullback can be minimal. But overall, there has been very strong resilience at the lower zone. On the weekly time frame chart, the counter have seen a decent consolidation around the 20-day exponential moving average and have started gaining traction. So from here onwards, I'm expecting 1280 to 1300 to be seen as the potential target from a short-term point of view. But if there will be any kind of breakthrough above the zone of 1300, then one may revise their target to higher zone. But for now, 1300 and 1280 will be the immediate target that one can expect in Axis Bank.
All right, moving on from Axis Bank to another financial name, Muthoot Finance, that is in focus in the back of a note by Morgan Stanley. Now, they're maintaining an overweight, and the target price that they have set is 4,385, which is a hike from their earlier 4,050 rupees per share. Now, in the bull case scenario, the price is between 6,620 to 7,150 rupees, whereas in a bear case scenario, the target price is anywhere between 2,620 to 2,835 rupees. Now, the EPS estimates have been raised to, in FY26 by 0.5%, and FY27 by 5.2%, and FY28 by 5.3%. That's driven by higher loan growth. The loan growth estimates are likely to be at around 50% on a year-on-year basis for FY26 from an earlier 43% earlier on persistently higher gold prices. Now, the gold loan growth is also estimated at 17.5% on a quarter-on-quarter basis in the third quarter. So, on the back of that, Muthoot Finance is in focus. So that stock is trading at the highest point of the day right now, up 1.28%.
All right, so that's Muthoot Finance for you. But moving on, Osho, you've picked out Poonawalla Fincorp for us. It's holding on to that shade of green today, and in the year-to-date trend, it has returned more than 50% to its investors. So what do you have to say about the charts going forward in 2026?
There has been very positive developments on the technical front. Firstly, the counter is showcasing a kind of very strong resurgence from the 200 exponential moving average. Secondly, on the daily time frame chart, we are witnessing a kind of flag pattern formation, and even the moving averages are showcasing a positive divergence. So I'm expecting that from here onwards, the trend should be on the higher end, and the next potential target that one can expect from a very short-term point of view is nearly 510. But even if it breaches the zone of 510, then one may look for higher targets of nearly 545 to 550 from short to medium term time frame. So overall, the technical structure is positive, and one may look for accumulation in this counter.
All right, so you could look at accumulation in Poonawalla Fincorp, 510 to 550. Those are the targets to look at. But moving on to another buzzer today, that's Indigo, which is in focus. It's one of the top Nifty losers today. Now, the company has announced a revision in its cockpit crew allowances that's effective January 1st of 2026. Now, the company has hiked multiple pilot allowances, including domestic layover, deadhead, night flying, transit, and has also introduced a new tail swap allowance for the first time ever. Now, domestic layover allowances, they have been raised by about 1,000 rupees for captains and 500 for first officers, while extra layover payouts for extended stays, they have also been increased. Now, this deadhead allowance, that's per block R, and domestic transit allowances, they have also been revised upwards. Apart from that, while this move supports crew retention and morale, markets are now watching as far as the impact on operating costs is concerned, and hence likely we are seeing a negative trend in the stock, which is down about 1.5% in trade right now.
All right, moving on then to the next counter that is in focus, and that is Hindalco. Well, Novelis, a subsidiary of Hindalco, has announced its entry into a subscription agreement with AV Minerals, the sole shareholder of Novelis and a wholly owned subsidiary of the company, pursuant to which AV Minerals agreed to purchase 50 lakh of Novelis' common shares, no par value per share for $750 million at a price of 150 rupees per dollar. And on the back of this, Hindalco is in focus today.
All right, that's Hindalco for you. But moving on, Osho, you've picked out NTPC for us. If we take a look at NTPC in the past 6 months, it has declined about 3%. In fact, for the first half of the year, this prolonged monsoon, it has been a dampener for many of these power generation companies. But going forward, what is the expectation? Could it be better in the second half? What's the chart structure suggesting?
See, overall on the technical front, the counter has made a very strong base formation for itself, and in the recent period, there is kind of some buying traction that can be witnessed in terms of volume. So I am expecting that from here onwards, the potential of reversal in NTPC is high. So on very immediate perspective, 332 is the first resistance for the counter. Once it breaches the zone of 332, then from there onwards, one may look for a pullback rally towards 350 on a short-term perspective, and above 350, one may look for a higher targets also. But for now, 332 and 350 will be the targets that one can expect. And at current levels, it is looking very lucrative. Technically, there is a kind of reversal formation on the daily and weekly time frame chart. So overall, the technical structure looks robust, and one may look for accumulation in this counter.
All right, the technical structure looks robust for NTPC, 332 to 350. Those are the target levels to watch out for. Moving on to another buzzer in trade today, that's Honasa Consumer. This one is in focus after the company's promoter, Varun Alag, has increased his stake in the company through a 50 crore rupees bulk deal. He has acquired about 18.5 lakh shares at a price of 270 rupees per share, which takes his individual holding to 32.45%. Now, post the transaction, the promoter group stake has risen to over 35.5%. Now, remember, this move is being seen as a strong vote of confidence by the promoter in the company's long-term growth prospects, especially as Honasa continues to scale its FMCG brands like Mama Earth and the Derma company. So, yes, that's as far as Honasa Consumer is concerned, and seeing a significant run up today, up more than 5.5% in trade right now.
All right, so that was the last talk of the day. Osho, thank you so much for taking the time out and joining us. We'll let you go on that note, but we'll take you through the exclusive of